shorts keep on printing in crypto, but also in TradFi. The US stock market majors are right now losing a very significant low. We talked about this for months and now it's happening. What we should make of the situation and how we should handle potential longs, all of that in today's episode. Let's go. So hello and welcome guys to a new week. We start off with crypto. We have not really done anything of significance. We still are in this range. And I also did not TP on my short so far. I said once we get a decisive close above this range, I will TP once again. But as long as momentum is pointing down, why should I? And right now, momentum is still pointing down. So I'm happy in the short, still up 20% for my portfolio. And we also talked about those bullish channels in crypto, if you remember, a few weeks ago, and how on the way down, usually lows remain protected. We do not sweep them simply because market makers want people to build up longs that they then can flush like in a real quick manner, trap them, create liquidity cascades on the way down because they want to reach a certain price level to start accumulating again. And right now, this looks suspiciously like such a channel. We had one here, we had one here. And if you look on the way up, price action usually looks a lot more bearish, right? We have this down pointing channel, we have undercutting the low, we have a down pointing channel. And this is for a very simple reason, because on the way up, people should get liquidated like when they take shorts, and they should panic sell on those liquidation events. And now with higher time frame structure pointing down, it's wise to look for signs that point in the other direction. And this is certainly the case right now in crypto. If this will lead to more downside or not remains to be seen, but higher time frame structure is pointing down. So I'm not willing to pay a full stop. I said I don't allow big drawdowns on my recent crypto positions. I'm still having a soft stop around break even on ETH. So pretty much this is still my stop. This is still my position. And on ADA, I moved my stop loss to break even. I'm still in, but it's pretty close to getting stopped. And should we undercut this low, I can still re-enter at any given time. It's not like I'm out of this position and I can never go back in. I can handle all my positions fluidly. And I know how altcoins behave. Sometimes you have those kind of aggressive wicks here, and they are way more erratic and they're way more dangerous than, for example, ETH, even though ETH is also sometimes volatile, right? But not like altcoins. Altcoins are just pure manipulation. And I have time on ETH because it's still 7% away and I'm doing this full time, so I can obviously check my positions whenever I want. And on ADA, we are much closer. Should we get a flush, I'm quite sure I get stopped at break even. Also, a quick look at crypto majors. We have this breakdown here on the daily, but if you look at the weekly, it's not that clear actually. We just filled this FVG. What is the 2 week? Just filled this FVG, haven't really closed below this wick, back in the range pretty much. So if you missed out to build some long exposure, this might be the time. But overall, looking at all markets, especially looking at the US stock market, we are having major weakness for risk markets here. We undercut those lows right now, and it's not even US session, so the US market will wake up to something surprising, I guess, for many. And this was our support level for a very long time, and we broke it down officially with the today open. And price rarely moves in a straight line. So after this breakdown, a little pullback makes a lot of sense. Doesn't need to happen, and it won't definitely not mess with my higher time frame ideas. But in general, now breaking this support down, going into this demand, going back up here, retesting this support and resistance knowledge, right? We maybe retest this previous support area now as resistance, and then we maybe continue further down. It remains to be seen. I'm not here to predict price on the dollar exact, but usually this is how price is behaving. And looking at the S&P 500, the SPX, it's signaling even more weakness. We also have some kind of demand here. And once liquidation cascades, once real selling begins on those US major, they can be very aggressive and very steep, simply because it's a market where pretty much everybody just goes long. And once those cascades start, they can be quite aggressive when people get fearful. Also, professional traders, institutions need to close positions because they have certain rules to follow after a certain amount of volatility and downside. They need to protect customers from more downside and stuff like that. So should there be a bigger move ignited to the downside, things could get ugly fast. So far, it's a pretty painful position actually, because it takes so freaking long. The rollover here, it was always a little bit of a prolonged rollover here. And until you finally get some clear signals, this breaking down, it takes ages. Like, you have to have a lot of patience for those kind of plays, but they obviously pay off a lot. And if you know that, and I also shared a post on X, simply showing that if I take a position like that, for example, if I have a stance that the US stock market is going to correct, I'm not just trading here, in this case, the Nasdaq, but I also know what this means for other risk on US stock market majors. And in this case, for example, IBKR doing this beautiful 3 drive here, breaking the structure down. I went short. Also Apple here. I mean, it's pretty much like the biggest part, one of the biggest parts of the Nasdaq, right? So obviously if the Nasdaq is going down, it's very likely that Apple, Nvidia, and in general the Max 7 is not doing very well. Also in this meta short, beautiful idea here with this gap. And these are all proxies for this Nasdaq short idea. And it's actually that simple. And I shared this chart like in January or December, I don't remember. And people simply don't care because it's no altcoin, it's not promising just buy and hold and you get rich or whatever. It's a real technical analysis of what the risk market, the US risk market, is doing. And I shorted the Pico top, and I predicted this top here as well. I was also short the SPX for this whole move down. And people simply don't care about TradFi markets. And it's so sad to watch, because if there is no altcoin in the name, if there is no altcoin setup, just buy this crap coin and it's gonna be fine and everything, people don't care. And actual trading happens on mainly in real markets. And now people are again like super excited for a potential alt season. And I mean, think about it. From this low, it rallied 30% ETH here. But it will never be enough. First of all, for everybody who's bought in this area, like ever since here probably, it will never be enough to recover losses. And also, it will never be enough to make enough money, because they will always want more. And this is actually a big move. On higher time frame, it's not enough for me to say I will TP, but I also have to short, so I don't have to. So, you know, guys, I hedge, I balance my positions out. And if I take the stop at break even, the trade pretty much was a win. So I was prepared for upside. Upside maybe didn't happen, maybe happens later, whatever. Until then, I managed my risk tightly. And that's it. And for most people, this is nothing. Like, and on the chart, technically it is nothing. But think about it. Why would market makers, once you trap people at the top, right? So people put money to buy, in this case, ETH coins. So they hold the ETH coins, right? On in this area, market makers, institutions, smart money is offloading those coins onto retail. And once retail possesses them, they usually write it down because they create pressure on price, they create liquidation cascades, pushing price to a level where they eventually want to buy back those coins. Because this is the market work, how the market works. In order to be like to make another round of money, they can't just sell it to you at the top. They need to buy it back at a discount. And think about it. Always people always tell me, oh, the altcoin market needs to rally again. It needs to rally because there needs to be a new money flow in the market. People lose interest. Yeah, but most people already have those altcoins. It doesn't really matter if they lose interest or not. At some point, it's about squeezing those coins out of their hands back into the market makers or smart money hands. This is what they aim for in the bear market, right? They don't want to, they know that people do not allocate or do not bring more money to the market after getting wrecked for 3 years straight. They definitely want to just get out at break even. They don't want to lose anymore. They hope for the best, obviously, but eventually they will capitulate. And this is what those big aggressive down moves are actually targeting. they do not target more dollar in the market. They do target people giving up their coins, giving up their assets once again. And so remember that these moves, like I said, those bullish channels, they are made to create liquidity for market makers to create those liquidation cascades. Because once people see this as an uptrend, they start longing this everywhere, at the top, at the bottom, whatever. And once market makers squeeze price down, those people get trapped. They're at some point are forced to sell. Their stop losses hit, the liquidations hit, they get margin called, whatever. And this is creating the big downward spiral that everybody's so fearful about. I mean, the same thing happens on the way up, right? And once it happens on the way down, people are suddenly surprised. But this is just how the market works. And that's why they create this channel, to attract more buyers even here. But once this is done, they want to scare people as much as they can, and they do this first of all with this moves down, with those moves down, and then obviously with narratives and more fear and all that. So people sell and they do not buy. That's the intention. And right now we have maybe seen this little counter trend wobble here, where people are made to buy, and maybe that's already it, right? Maybe market makers had enough. Maybe market makers look at their data and they say this is enough to create another liquidation cascade lower, maybe even undercut this low, and then probably the real panic will begin. And this is maybe their main target. I'm not saying I know that it is, but it looks suspiciously like that, especially as I said, looking at the US stock market. We seem to be in a very risky territory for being max long risk. And so, guys, manage your risk properly. Don't be like everybody else. Don't get trapped in positions, hope for the best. This is not how trading works. And yeah, if you have seen this chart on X, make sure you read all that, because if you understand what I write here, you will probably outperform 95% of everybody who is chasing altcoins for the big money. It's a very simple game, actually, if you don't overcomplicate it. And I try to make it as simple as possible. I know it's a lot in the beginning, but focus on the basics. Don't look for anything overly fancy. Don't fall for certainty sellers. There is no certainty. Learn about the basics: supply, demand, premium discount, support and resistance, market structure, a little bit of macro context. And you're already sorted. This is the magic sauce, and everything you add on top should increase your performance. But people don't even outperform the SPX, but they want to have the super fancy, super refinement. They fall for all kind of riddling stuff from people that don't even know themselves what they're talking about. They just make it a riddle because they know the intermediates, they want to have something complicated. They want to have something to think about, something to play around with. They want to be entertained and still fed the belief that there is certainty that they are going to be rich with trading. But in the end, there's only one certainty, that it's probabilistic, and you should prepare for probabilities. That's it. That's also why I do not this riddle stuff, even though I do posts and write something very specific and clear. And it has not even something to do with trading itself, but people make something out of it and think like I'm predicting something here between the lines or whatever. Guys, I'm probably the most straightforward trader you will find. Simple strategy, simple ideas, simple execution, and in the end, I outperform probably 90% on X. And in case you're interested to work more personal with me, I have this group mentorship running. We have a discount for the rest of the week. It's 35% off. It's over 140 PDFs. It's 2 weekly calls. You can ask all your questions. I'm there to help you to become a self-reliant trader. No bullshit, no riddles, no super fancy crap. Simple strategy, execution. You can watch me, you can ask me, you can trade alongside me. That's it, guys. Have a nice week. We talk next time. Bye.